Hello, welcome to another edition of Nucleus Investment Insights. Today we want to have a look at election-proofing your investment portfolio. So I have Leith all fired up, ready to come in. Just a quick reminder, what you hear today, it's going to be general in nature. It's not personal financial advice. If you do want personal financial advice, feel free to book in for a call with us or drop us a line. Also a reminder to hit that like and subscribe button if you like what you see, and you can post in any questions or comments into the chat, and we'll try and answer some of your questions as we go. With no further ado, welcome Leith.
G'day Damo, how are you?
Not too bad. Good to see you again. It's been a little while actually since we've had you on the podcast.
Oh, no worries, mate. Anytime.
Yes. So the election. So we'll. I sort of figured we'd start with the. I guess your favourite topic, housing, and then I guess the thing for everyone. So there's a raft of different housing policies that have been announced. I won't put my 2 cents in yet. I'll let you take over and tell us what you think of the housing policies, whether there's any major differences between the two parties, and your expectations for where we're headed.
Yeah, look. To cut a long story short, both policies are garbage, and they're going to basically inflate Australia's house prices even more than they already are inflated, which is a retrograde step. So just to run through them, I'll go through Labor's first, just very quickly. Their key policies, just because they're the most likely, obviously, win on Saturday. So Labor's got two big policies which are incredibly stupid. Well, one in particular, and that's to effectively allow all first home buyers to purchase a home with only a 5% deposit, and the federal government, i.e. taxpayers, would guarantee 15% of first home buyer mortgages. So effectively, it's a state-sponsored subprime mortgage scheme that Labor's proposed. And
they haven't named it that, though, have they?
No, they haven't. But that look, let's be honest, that's effectively what it is. And this couples with another policy that they introduced about a month or so ago, whereby basically they've instructed the financial regulators, who then obviously instruct the banks and the lenders, etc., to exclude HECS debts from assessments for mortgage serviceability, which obviously increases their capacity to borrow. So that's a secondary issue. The main ones is this 5% deposit scheme, and what effectively that's going to do, it's going to obviously bring more marginal borrowers into the market, and it's going to lead to first home buyers taking on more household debt because obviously going to have less equity, and it's going to obviously push up demand and inflate property prices. So do we really want? Australia's already got some of the highest household debt in the world. We've got extraordinarily expensive property. The Australian housing market is currently valued at $11.3 trillion, and that's across 11.3 million homes. So the average home in Australia, not the median, talking the average, the mean, is valued at $1 million currently, according to CoreLogic. So we have that is the fundamental reason why Australian households are always ranked as being amongst the wealthiest in the world. It's because we've got expensive houses. Now, that's not true wealth in my view, because everyone needs somewhere to live. And this policy by Labor is just going to pour more petrol on the housing bonfire and push up prices even further and make housing even more expensive. And it's going to tilt the economy even more towards housing. Australian housing is currently valued around 4.5 times Australia's GDP. That compares to about 1.7 times in the US, and it's much higher than other Anglo countries. So we already have far too much capital, financial capital, invested in our housing in Australia for what is effectively non-productive asset. 1990, Australia's banks lent 2/3 to businesses and about 1/4 to housing, and the rest was personal loans. Nowadays, they lend nearly 2/3 to housing and don't lend much to business. So we have tilted the entire economy.
About. You put a post up just recently on productivity, big one on productivity, and that's that whole part, isn't it? Like if we doubled our house prices overnight, we just suddenly decided, you know what, everyone's house is now worth double what it was. All you've done is mean that businesses and consumers all need to pay extra for rents and all that type of stuff like that. Effectively, all paying it to people who have already built the houses. It's not like it's not going to anyone for any extra service, and you're just reducing productivity.
Yeah, that's it. And obviously the banking system then gets tilted towards, because people got to pay more for their homes. So the banks then have to lend more for property rather than doing it for productive businesses. So, unfortunately, Labor's policy is going to do that. But now the coalition's is equally stupid. So the coalition wants to allow first home buyers to be able to raid their super for a deposit. That's number one. And number two, they've also, set up a negative gearing scheme effectively to allow first home buyers who buy new properties to negatively gear $650,000 of their mortgage for it is for I think 5 years. So effectively that first home buyers will be able to claim as a tax deduction their mortgage payments on a new home. Now look, it does have the advantage there in that at least it's only applying to new homes, so it'll just push up the price of those a lot. Because as we saw, the home builder stimulus just got added to the price of new homes.
So I've got a lot more sympathy for that as saying how do we expand supply and all that type of stuff. But as you said, it's good to have plans to expand supply and get more building. But if you know that most of the gain is going to go straight into the pocket of the developers who will
which it will
prices up by that price,
I mean,
feels less less exciting.
Yeah, and obviously, when we have a supply constrained market, not enough builders, et cetera, not enough tradies, not enough anything. If you're just going to add a whole bunch of taxpayer stimulus to that, well, it's just going to push up the price. And unfortunately, it's also going to the coalition's policy would also cost the budget a hell of a lot of money. So Labor's 5% deposit is a contingent liability in the budget, whereas the coalition's will actually drain the budget because. The coalition used an example of someone on $120,000 income who negatively gears a $650,000 mortgage. The coalition boasted that they'll save $12,000 a year. Well, that's $12,000 a year that the ATO is not going to get in personal income tax receipts. So you're actually going to narrow the tax base as well. So that's stupid policy, Dumbo on the left, Dumbo on the right.
But it's also this part, isn't it, where we've got a policy effectively now which says to retirees, if you want to rent a place rather than buy a place, we're going to penalise you every year financially. And effectively, it's almost turning that around to first home buyers and saying the same thing. If you want to keep renting, you're going to have to pay all this extra. You're going to have to pay $12,000 in extra tax. But if you go gear yourself up to the eyeballs and buy a property, we'll give you a tax break for it. And so like that. Forcing people once again to into the housing market on both at retiree levels and at first home buyer levels.
Yeah, and I'll get back to my first, what I said before. So Australia's housing stock's $11.3 trillion. Well, these sorts of policies, what are going to push it up to? 12, 13, 14, 15, whatever. Obviously, it grows over time, but all it means is that if we keep funneling more and more, mortgage debt, everything into the property market, its size relative to the economy is going to keep growing, and it's just going to become a bigger millstone on everyone's necks. And ultimately, these sorts of policies, as we've found with every first home buyer grant in the last 25 years and all these other sorts of demand side stimulus, it doesn't make housing more affordable in the end. All it ends up doing is ends up getting capitalized into home prices. And then, if obviously you're a first mover and you're one of the first to get in on these policies, well then you're okay because prices will go up afterwards. But, if you're a first home buyer in, say, 10 years' time, and we've had 10 years of these policies, well, you're going to be entering the market, and it's going to be a lot more expensive than it would have been otherwise. And in the end, you're just facing a worse affordability equation. And all we've ended up doing is just sucking more taxpayer funding and, the nation's capital into a non-productive asset, which is really just everyone trying to put a roof over their head. It's just pointless.
Well, and it's intergenerational generally. It's because it's basically saying let's just transfer more money to people who are selling, and given Australia doesn't have any meaningful inheritance taxes outside of a relatively small amount from super, it sort of turns it into saying, the natural extrapolation goes, well, we're trying to build an egalitarian society where it doesn't really matter who your parents are. You can still go ahead. Whereas we're getting to the stage where, it really matters. And if you're an only child and you inherited a full house from your parents, that's great. If you happen to be one of three or four and you only get a third of a house or a quarter of a house, it's really, where did your parents buy 20 years ago or 30 years ago or 40 years ago? That's that will be the key determinant of how wealthy people are.
Yeah, and in fact, I did some just before I came into the podcast, Damien. I was looking up the 1991 census just for fun to look at the situation then versus now.
As
you do when you're a nerd.
Yeah.
I've written an article just going up tomorrow, which actually mentions this stuff. But so the 1991 census, the home ownership rate was 5 points higher, 5% higher than it was in the 2021 census, which is the latest data we've got. So we had a 5% higher home ownership rate. The price to income ratio was 3 times incomes for a house, for a home, I should say, a dwelling, versus 8 times currently. Right, so way better there. Household debt to disposable income was 70% versus 180% now. And I'd argue that Australia was a much more balanced economy then. Again, banks lent 2/3 to businesses and only 25% to housing. We had a much bigger manufacturing share. The economy in general was way more diversified and less deindustrialized and financialized than it is now. And, but according to the global wealth statistics, so if you go, say, the UBS global wealth report, which or the Credit Suisse wealth report, there's a whole bunch of reports that are released by separate international banks every year, and they always have Australian households right near the top. But and that's because they're expensive housing. But in 1991, with the price of housing we had back then, Australian households would have been far down the list. But I'd argue that they're actually wealthier in the true sense of the word back in 1991, because, I'd argue that a society is wealthier if young people can afford to buy a home. They don't have to, be born into a rich family. They don't need the bank of mum and dad, all that sort of stuff. So, unfortunately, for 30 years of mismanagement, we've created this problem that we're in. We've created our own millstone for our own back.
Yeah, and very hard to get out of. And because as soon as you say to anyone, I've got a policy that might push house prices down a little bit and make things more affordable, a large proportion of the population is not interested.
Yeah, well, I mean, that's the thing. Still 2/3 of Australians either own the home outright, well, that outright figure's shrinking, obviously, or they're paying off a mortgage. So unfortunately, the political math is always in favour of higher house prices, because if you just bought a house recently, got a big mortgage, you don't want to see it fall. And if you, someone like me, I personally don't care, because I'm sort of at the stage where I've paid off this house, got bugger all left, and I'm more worried about my teenage kids and their future. So, for me, the fact that Melbourne house prices have stagnated for 8 years, it's kind of good, because I know my daughter is, 14, my son's 17. At some point, they're going to need a house, and then they're going to need the bank of mum and dad. Well, if prices don't rise, they won't need as much bank of mum and dad. So for me, I actually see that as a win.
Yeah. Now, I should actually just highlight as well. So just from a big picture investment point of view, so I picked housing just because that's probably the productivity. This is this productivity thought around investment for Australia and how we're thinking about that. I think the other thing, though, I do want to highlight is, for me, there's not a lot of difference between the parties in terms of policy. So in terms of economic outcomes, there's really not. We'll pick on a few of them in a minute, but really there's not a lot that we can sort of say that's going to be wildly different. The other thing, and I guess probably even just as importantly for the Aussie market, is most of the big Aussie stocks are international stocks. So if you talk about BHP, if you talk about CSL, Sonic, Brambles, any of these sort of large, not any stocks, but most of our large stocks within Australia, they're actually international stocks. And so if their Australian revenue falls by 20%, it's actually not that much, not that big of a deal. It's a very small part of their overall portfolio. And what really matters is global growth. So it's a little bit. There's studies out there sort of showing who does better under coalition or better under Labor, and all these things from the stock market perspective. But for me, those are pretty much useless in terms of saying, well, if there's a global financial crisis in the middle of yours, or if there's some sort of economic boom in the US or bust in the US, that's what drives the performance of the Australian stock market largely. The local conditions is sort of the icing on the cake as opposed to the sort of the guts of it. So and then sort of around outcomes, I think that the betting markets basically have Liberals at not great hopes of getting through, quite low odds, and then basically split between whether it's a Labor minority or a Labor majority. I think there's not a lot of outcomes you'd get to where you saw a Liberal minority government. I don't think, Leith. No. It's sort of maybe there's one or two independents who might back them, but yeah, it's sort of that's a relatively unlikely outcome. And so the other thing, though, I guess that pops up is, if it is a Labor minority government, are there any policies you can sort of think of which is Labor might secretly want to do, but doesn't want to bring it to the election, and then if they have to, under the guise of, oh, okay, we needed to negotiate with whatever the Teals, we needed to negotiate with the Greens to get another policy across the line. Are there any of those that you can sort of see in terms of, I don't know, housing market? I guess Greens have got a number of housing market things that they'd like to do. Teals have got, I guess, mainly climate change type things they'd like to do. And again, I think the Teals are probably less homogenous once it comes to things they want to do on the economic side.
Yeah, so the Greens maybe, given that Labor took negative gearing reform to the 2019 and the 2016 election, there's a chance that they could, go, we've got to bend the knee to the Greens and do a negative gearing policy. And I'm hoping if they do that, they at least do their policy from the 2019 election, not the Greens one. So the 2019 election policy was basically to grandfather negative gearing for existing investors, ban it for investors going forward, except for new housing. So at least it would have had a supply component. That the Greens policy is basically to allow, if you've got one investment property, you can keep negative gearing that, like to grandfather it if you got one. But going forward, and if you have more than one, you can't negative gear it at all. And the ridiculous thing about the Greens one, which I think is kind of stupid, is when it comes to the capital gains tax concession, they want to go back to the pre-1999 CGT, which is a good move. And what that was basically you only tax real gains. So basically, if your investment goes up 50%, inflation was 20%, you only tax 30%. But the problem with the Greens policy is they want to do that for shares, for non-housing assets, to only tax real gains, but for property assets, they want to tax nominal gains for capital, which I think is absolutely absurd. You shouldn't treat them differently, and you should only ever tax real gains when it comes to capital gains tax. So I'm hoping if Labor does bend the knee and have to capitulate and do negative gearing, they at least say, yeah, okay, we'll do it, but we're doing our policy that we had in 2019. We're not doing yours because yours is unworkable.
Yeah,
or it's inconsistent.
And I'll probably preface that whole speculation as well with Albanese hasn't been a courageous politician in his past and want to take too many risks. So it seems
But I guess it is a way for them to do what they propose in those two elections. But to say, we've been forced to do it. We didn't take this to the election, but we've had no choice.
But couldn't. Yeah, exactly.
Blah blah blah. The only other policy I hope they do, which isn't housing, is, and I don't know why they've announced it anyway, is gas reservation. So obviously the coalition.
Let's do that whole energy. Let's move on to that whole energy part. So So and this does make a difference for some companies out there. Obviously, there's the local sort of companies that are involved in that, particularly the gas producers and Gladstone gas producers. That does make a difference to those in terms of Origin and Santos and Woodside to a certain extent.
Yeah. So we've got the coalition. This is actually the single best policy of the entire election campaign, in my opinion. It's the only policy that I can actually say, that's a beauty. The rest of them are, pretty basically dud policies from both sides. So in the budget reply speech, opposition leader Peter Dutton promised that if the coalition were elected, they'd implement an East Coast gas reservation policy. So effectively, they'd force the East Coast gas companies, which export nearly 3/4 of East Coast gas, and they've actually doubled their gas production in the last decade, but they've actually supplied the domestic market with 25% less gas, which is absurd. And we're facing East Coast gas shortages and the prospect of importing liquefied natural gas at the end of this year or early next, which is going to send the gas price rocketing and also electricity price. So Peter Dutton said he's going to force the gas producers to divert their uncontracted spot gas. So this is gas that's not contracted, which is sell into the international spot market. He's going to force them to supply that domestically. And the way he'd force it is he'd actually put an export levy on it. So if you want to export it, you get taxed to buggery on that spot gas, which is good. And to basically make it so it's far more profitable to supply it domestically. And doing so would negate the need to have to import gas, which is terrible from an environmental perspective, because you've got to liquefy it first and then ship it and then convert it back into gas, etc. Use a lot of energy, all that sort of stuff. It's also kind of stupid when we export nearly 3/4 of our gas on the East Coast. Why the hell would you import it? And also Dutton's gas policy is also excellent because we have an issue whereby Victorian gas, so Bass Strait gas, which started about the 1960s, is now coming towards the end of its life. So we're now getting less flows out of that. And it can't supply Victoria with enough gas over winter, which is when Victorian gas use spikes for heating and all that sort of stuff. So we've got a north-south pipeline from Queensland down to Victoria, which for 9 months of the year doesn't operate at capacity. Problem is in wintertime, when Victoria becomes an importer of gas from Queensland, the pipeline hits capacity, so it can't push more gas through without expansions. So what Peter Dutton has said he'd do is they invest, I think it's $1 billion or $2 billion into expanding the north-south pipeline and or building a storage terminal down south to store gas, so that effectively, like your barbecue at home, you fill up your gas bottle in winter to use it in summer. We could effectively fill it up using the excess capacity in the north-south pipeline during the off-season, fill up the storage for winter, and then use it in winter. This is what they do in Europe and the US and that sort of thing. Excellent policy. Unfortunately, Labor has not. They've been Me Too in a lot of policies, and so have the coalition. But on this particular policy, Labor's canned it, which is absurd. And the problem with it is we pay about $12 per gigajoule for East Coast gas, which is extraordinarily high anyway. But if we start importing gas, we're going to be paying import parity prices, which is going to be about $20 or above per gigajoule. So we need to avoid that at all costs. And if we start importing the gas, which is predicted by end of this year or early next, they've sort of got an import terminal, Twiggy Forest. There's got one open up in Port Kembla, New South Wales. There's another one planned for Victoria and South Australia if we don't fix this supply issue. What it means is that obviously the gas price goes up. It also means that the electricity prices will go up, because gas is a marginal price setter for electricity in the wholesale market. So we'll pay more higher energy costs, gas and electricity on the East Coast, and that is bad, obviously for inflation reasons, cost of living, but also it's going to shrink our manufacturing sector even more, which is already the smallest share of the economy in the OECD. So we're going to deindustrialize the nation even more. So I'm hoping that Labor, even if they're not a minority government, sees sense and actually does this policy.
Yeah. So I guess just in terms of an investment point of view, so you go, Labor gets through and doesn't need to put this on, just leaves everything as it is. You're like, okay, that's bad for inflation. Looking at higher interest rates, you're looking at more pain for anyone in the manufacturing sector in Australia, say building materials and stuff like that. Whatever manufacturers we do have left are going to find it problematic. The flip side is, and good for the exporters, the gas companies, so Origin and et al. The flip side is, if they do form a minority government, or they either see reason or they form a minority government, and it required this, then it's the reverse. Bad for those energy exporters, good for Aussie manufacturers, building materials, very good for inflation.
Good in the short term. Well, yeah, it is. Don't get me wrong. It's net good, but the Greens also have a zero. You can't have any hydrocarbon.
I'm not saying they go to the Greens one.
Sort of crap.
But they can negotiate with
exactly.
the Liberals on this one.
True.
And the other thing is, it is worth noting that just from a big picture point of view, you've effectively got a gas cartel overcharging, and the Australian government at the moment, the Labor policy is, I will just pay them extra, so we'll just pay the bully off, so that
subsidies,
so that consumers don't get it. Whereas the Labor one, the Liberal one, is actually no, we'll charge them on the stuff they're trying to, the excess stuff. So yes. Anyway, we could complain about that all day long. What else have we got? Immigration.
Yeah,
another big sort of inflationary guide, and we've seen Canada makes some. I guess, do you want to compare first with Canada and what they've been doing on the immigration front?
Yeah, so Canada, like us, completely dropped the ball in immigration, and Canada had the biggest surge in migration in their history. It actually was, dwarfed ours. So we've beaten Canada in immigration over 20 years, but over the last 5 years, Canada's beaten us. And they, up to last financial year, so 2023-24, Canada had net overseas migration of 1.2 million, which is just, for a country of 40 million, is off the charts, and created a massive housing crisis, et cetera, blah, blah, blah. They've had zero per capita GDP growth for a decade. Just a, absolute schmozzle over there. But the Liberal government, which just got re-elected under the former Prime Minister, after they had a massive backlash in the polls last year, he announced that they're going to freeze Canada's population growth for 3 years. And the latest immigration data for Canada, which was the fourth quarter of last year, because it's always lagged, showed that Canada actually had negative temporary migration. So negative overseas migration led by temporaries. So they actually lost temporary migrants. Their overall population still grew, marginally. It's basically flat. So they've basically stalled their population growth, and as a result, they've had 6 consecutive months of fall in asking rents. So the rental prices are falling. It's been pretty successful. They're now slowly, housing construction in Canada is now catching up, because they're not having this, massive oversupply, massive demand spike through population growth. And it's been good. Australia should basically do the same, really. We should cut right back in net overseas migration, let the supply side of the economy catch up. The coalition has promised to cut the permanent migrant intake by about 25%. They've given vague promises that they do it on, that they cut net overseas migration as well, which includes temporaries. But they've been very coy on how they do it. So they've been very non-committal. It's all, a few motherhood statements, etc. Labor, on the other hand, basically haven't committed to much. So,
I think they did commit last time, didn't they? And then reversed all those commitments. So
I mean, look, honestly,
so they sort of try to probably just stay quiet on it, so that people don't remember what they said last time on it.
That's right. So what Damien's alluding to here, just before the last federal election in late December 2021 and January 2022, they said they'd run a lower immigration program. So actually lower immigration than what we'd had, and instead they, as we know, they use the jobs and skills summit as cover to ramp it to levels we've never seen before. So I don't trust either side on immigration. I guess if you had to weigh them up both side by side, the coalition, would probably deliver slightly less immigration, but it'd still be very high. And it's still too high for the level of housing supply and everything else we've got.
Yeah. So the hope is that is that Canada keeps kicking some goals, and somebody in Australia says, hey, maybe we should do that too.
Yeah, but there is a risk though. If Labor has to somehow form a minority government with the Greens, which I don't think is going to happen, but that's a very outside possibility. That we could actually get more immigration, because the Greens are complete open borders nuts. So if you actually read their immigration policy, their policy is explicitly for more immigration. So
and the other risk
they make cutbacks hard. Yeah,
the other risk is that Trump's tariffs and everything turns into a reasonable sized recession in Canada. They've frozen their population growth, and you get a bit of a housing crash over there. And all of a sudden, people say, "Hey, that was the worst thing ever, freezing immigration. If you don't want a housing crash, don't do that."
And there's also the thing here. So Canada's immigration boom was driven by overseas students to a large degree. Like, their permanent migrant intake's high, but the absolute spike was mostly students, etc. A bit like here. And there is a risk that now that Canada's frozen its migrant intake, and it's clamped down on the student colleges and all the other stuff over there, that they'll come here instead. because we're the path of least resistance.
Yeah.
So
there's one risk there. The other risk, though, the other positive risk is that Trump did speak about saying basically selling green cards to students.
That's right, he did too. I forgot about that.
So that's your that's your positive side, is that you lose a lot out of Australia because they all start going to the US instead.
Yeah, I forgot about that. Yeah, so Damien, basically Donald Trump said before the election that anyone who studies over in the US will automatically get a green card, which is bonkers. But anyway, that's
but good for us. Yeah. That's as we said, we relied on Joe Biden to give us some industrial policy that actually got trying to get manufacturing and stuff going in Australia, and now we're relying on Donald Trump to do the worst, to get rid of the excesses that we've got in terms of our own education policy. Right. What is immigration? Health. So health. The only one I want to say on that one is more that it's more of a motherhood statement. I think is that that the Libs would probably have more private, and Labor's probably looking at, while it's not concrete, is covering more in terms of Medicare and things like that. And so what that means for me as a big picture is, from a stock perspective, is at the margin it's worse for health insurers, because the better the public option, the less likely people are to take up health insurance. It's a little bit worse for the private health hospitals, so Ramsay and Primary and things like that. But for the bigger stocks like your Sonic, your CSL, Cochlear, they're international stocks. Australia makes a little bit of a difference, but just nothing meaningful in terms of that. So it's actually more about like the whole healthcare sector, because those big stocks are so big. That's what's going to move the market, not Australian policy. But at the margin within those, you probably might see a bit. And it's probably just worth highlighting as well. This is a comment that actually I haven't really spoken to you about this one, but I think someone was making the comment to me that when you look at the Australian healthcare system, we actually rank really, really well in terms of how we've managed the public versus private part of, like, the public needs to be a serious negotiator at bringing down prices and all that type of stuff like that, and was public. But we've completely stuffed up the NDIS in the same way. Yep. Like, it's just like we have this model that, like, this is a health system that manages public versus private, whereas NDIS is basically just gone, let's just let the private run amok and charge whatever they want, and without any group buyers or anything like that to drive that down. And so I guess that's one area where we've seen stacks of growth in terms of runaway spending in terms of the budget. I don't know whether you think that they'll make a serious attempt at that in this next 3 years, or whether it's more just going to be sort of a bit of lip service and string a few people up who are making the worst offenders, but sort of letting largely the system keep on going.
Well, I think they'll to a degree they'll be forced into it, because the spending on the NDIS is approaching 50 billion. And the Parliamentary Budget Office predicted it to double to about 100 billion in a decade. So obviously that's not, in real terms, it's not double, but to keep growing at extraordinary rates. And the Parliamentary Budget Office tipped that by in a decade's time, it's going to be bigger than the age pension and all these other programs have got. So it's, we're talking a ginormous amount of money here. So I think they're going to be forced into doing some sorts of actions. What that is, I don't know. But to your point, you're 100% right in the way this thing's been set up. It's been set up very poorly. It kind of reminds me of about a decade ago, we had that vocational educational training privatization bit. Remember that? When anyone could sign up to a dodgy ghost college, and the ghost college would get a bag full of money, and they didn't even end up doing the course. It was all done on faith and all this sort of stuff. And so the ghost colleges then were handing out free iPads if you sign up to this course, because they could pay $300 for an iPad, but then get paid a $5,000 kickback, and blah, blah. It had just a lot of rorting. It does remind me of that sort of scheme.
Yes, but no, regardless of who wins, I haven't seen any sort of major sort of imminent types of things on that. Made in Australia, which is a
boondoggle.
this feels a lot like picking winners. And so, from an investment perspective, if you happen to luck into somebody who's good mates with somebody on the Labor side and manages to get a fistful of money, that's great. But it doesn't seem to be sort of well thought out and
terrible.
So
I'll tell you why it's terrible, because it doesn't fix the underlying problem, which is the underlying problem is that we can't have a manufacturing sector that's competitive with expensive energy. And Labor has no policy to bring down power prices, especially with the gas issue. There's other stuff I could go on about, which we won't even get into. But the the fact of the matter is, if energy prices keep going up, which they will under current policy, we're not going to have, the only manufacturers are going to be left are going to be ones that cannot do stuff overseas, whether it's like, some sort of fresh food thing or alternatively, the only sort of proper manufacturing we'll have left is going to be stuff that's subsidized, right?
Yeah.
So it's going to be government subsidized manufacturing, when really what we should be doing is not subsidizing manufacturing and then fixing the root cause, which is expensive energy prices. Getting ourselves cheap energy. There's no reason why Australia shouldn't have some of the cheapest energy in the world. We're awash with everything, but we've decided not to. And that is my issue with it. And this whole notion that Australia should be building bloody solar panels and all this other stuff that we're never going to be competitive in is nuts. And I could go into a whole bunch of stuff, mate. The amount of billions of dollars spent on green hydrogen and all these other boondoggles, which has never been proven anywhere to actually be economic, is just throwing money down the drain.
Yeah, well, I think for me, the hydrogen one as well is it would seem to me, and I won't name any names, but there's some companies out there with some high-profile leaders.
I know who you're talking about. I know I'm not going to mention
it. But their goal isn't to produce green hydrogen. Their goal is to produce the machines that you can sell to people who want to produce green hydrogen, and they're asking for they're effectively saying, hey, there's a gold rush going on. There's a gold rush. Hey, Leith, let me sell you a pick and shovel. Oh, actually, can I get a government subsidy so I can make some picks and shovels and sell them to Leith? And it's like, just a minute. Why are we subsidizing the pick and shovel makers? It's not even their technology. It's not even. I bought the picks and shovels from a pick and shovel maker in China. So, yes. Anyway, we won't go. Let's
stay away from it.
But I guess the made in Australia. Yeah, I guess the net effect on that is great if you happen to be the mate who, or somebody and you've paid your Liberal donations, Labor donations to get that. But unlikely to be that good. Unrealized gains is another big one out there. Now that was notionally slotted for this time, but just disappeared into I guess they had lots of plans to do very little, and that included anything that might upset anyone. So your thoughts around the so just to get this right, this is basically that on superannuation balances over 3 million, there would be you would start to get taxed on that, some capital gains tax on that. Sorry, unrealized capital gains taxes on that.
I'm not a fan on the principle of taxing unrealized gains. It's a slippery slope as well. From the policy, from the way I understand it, it's not going to be indexed as well. So $3 million sounds like a lot. In 10 years, it's going to be less. 20 years, it's going to be less again. Obviously, we'll go through multiple election cycles, so that policy can change, etc. But I don't like the whole thing of, the market went up this much, you get taxed. Well, what happens when it goes back down? Do you get a rebate? If you're one of these people with $3.5 million of super or something, good luck to you if you are. And we have a GFC style event and stock market crashes. Well, then do you get a check from the government if you've paid tax earlier? Like, how does this work?
Can I just make it much simpler? We've already got this taxation system where if you earn 20 grand, you don't get taxed. If you earn 50 grand, you get taxed a little bit. If you earn 500,000, you get taxed more. He's just saying, well, why don't we just put a sliding scale on super? Like it's not a big step. And there's also the part about saying, well, once you get over a certain amount, and maybe 3 million is the right number. Once you get over 3 million, then you got to take all the money back into your own name and get taxed at whatever's in your own name, or I don't know, whatever it is. So like there's plenty of other ways you could say that people because there's a genuine concern that and if you're thinking about your own tax situation and particularly people who have super, is basically you want to try and pour as much money into super as you can to get that. If you're making a decent amount of money, if you're making sort of 100,000 plus, you want to pour as much money as you can into super and get that lower tax rate. And then you want to have as much money in super as you can when you're retired, because you're at zero. You get taxed at zero.
Yep.
So if I've got $1 million sitting in super in my own, $1 million sitting in super or at getting taxed at zero on whatever I earn on it, or $1 million in my own name, and I'm getting taxed at my marginal tax rate for whatever I earn in that. So once you're in retirement. So so you want to try and pour as much into super as you can. And there's lots of different strategies, and we can help people with those if you've got them. But there's one thing about us saying to people, you want to do this because so Leith comes to me and says, he doesn't want to pay more tax than he has to, and it's like saying, great, I'll give you a strategy to do it. And there's plenty of them out there that get that money in there. But then to say, well, is that a fair outcome that we have 70-year-olds with millions of dollars worth of housing and $2 million in super, all earning money at tax free, and meanwhile everyone else is paying higher rates of tax? That doesn't sound right to me. So I do think there's a step you can take in that direction, but there's so many other things you can do before you start taxing unrealized gains. Having said that, do I think that's going to cause the death of the super industry or anything like that? No, there's not. It's still incredibly incredibly beneficial to use that money through super. Actually, that does remind me. I probably should go with a quick sales message.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
So before we get on to the next couple of things to wrap it up, I just thought we should actually touch on some of the questions we've had. One of them is, when I'm going to extend this question, is from Ethan Parker. Which scenario is the best for housing prices? So I guess I'd probably say, I probably might extend this to go. I can think of a couple of pretty good ones for it, but what are the 3 or 4 things that would that could sort of come together all at the same time to give us the best outcome for houses? And then what are the 3 or 4 things that could come together to give us a poor outcome for housing prices?
Poor outcome for housing prices would be the stuff we just mentioned. So I'm assuming poor means prices going up. And
sorry. Actually, yeah. Let's talk about it. Think about it as a housing. If you own a house or you're thinking about investing in housing, what's house prices going down, and then what's house prices going up? Maybe we won't use poor and everything, because I guess obviously if you own something, it's good if it goes up, but it's a bad thing for society and Australia's productivity, as we said. Yeah.
Okay, so if you own investment property now, I think you'd be feeling pretty good about yourself, because obviously, most economists, markets, etc., expect the Reserve Bank of Australia to cut interest rates. I think the financial markets are 4 to 5 cuts this year, which I don't necessarily agree with, but we're going to get some decent interest rate cuts if you believe those forecasts. And then you've got, assuming Labor wins, we've got Labor's policy coming in January 1 next year, which is going to put a rocket, should put a rocket under prices with 5% deposits and etc. So I think, that could usher in a decent house price boom.
And I'd add into that immigration. So if immigration stays high, you get a rush suddenly for these new houses. We haven't got much building going on because they don't do anything on energy prices. And so all the costs stay high.
And the thing about that is, so we had a 40% increase in costs since the pandemic, roughly. And generally, when you get a rise in costs, they don't come back down. So even if we had zero inflation in building costs for 5 years, they're still going to be structurally higher than they were before the pandemic, which just makes it harder to build stuff.
And a lot of that's energy. Is energy intensive. Cement and bricks and all that type of stuff is energy intensive. A lot of that sort of within that. And then I guess what we're talking globally is you're getting a bit of an accident happening in China and RBA doing some preemptive cuts, but Australian economy not sort of falling into any sort of deep recession. The RBA is getting in front of it, I guess. If the RBA is in front of it, so we're not really seeing not really seeing as much as in terms of economic downside, but yeah.
So that's sort of like what happened during COVID when they had the emergency cash rate of 0.1%, expecting the worst case scenario, and then it ended up just ushering in a massive price boom. So
and effectively negative interest rates for banks.
And that's entirely possible. Something like that could happen again. Not saying it's probably an outside chance, but it could.
Yeah, so that's your perfect scenario, and you can slice those up, and then your negative, your house price falling scenario
is almost the same. So say the RBA was slack at reacting, and then you did get a China shock, whatever. We had a massive terms of trade crash. We suddenly
people losing their jobs a big one.
That's it. So suddenly it ends up we get a spike in unemployment for whatever reason.
Yeah, and inflation stays high, so the RBA's sort of kept.
Yep. Yeah. So it's sort of like a stagflation, low growth, high unemployment,
and they happen to decide to get rid of immigration at the time. So that's you add in all those, and you end up with a really negative outcome. You flip them all around, you get a really positive, and who knows which ones are on and which ones aren't. Yeah.
I tend to generally back the bullish side just because that's the way our political system's geared.
Yes.
So I'd probably be more against a crash. I mean, it's always possible, but just because we know the way Australia works, they'll, we've seen it enough times. The policy will come in, the RBA will react, etc., to try and just damn it.
Yeah, and as we said, the immigration stuff, they're not talking about doing that in any major sense, and and same with the energy. Like we're not going to have a big fall in energy prices because they're putting on reservation, and so. Yes.
Sorry, can I just say, Damien, that being said, New Zealand has just had a massive, a pretty big house price crash. At least, nominal terms has come off a lot, and in real terms has come off heaps. So
numbers around it, just
so basically, New Zealand had the biggest boom after the pandemic, bigger than us, and their house prices have retraced back to their pre-COVID level. Right. In real terms, I think in nominal they probably went down 15 or maybe 15 or so percent, but in real terms down about a quarter. And so that pretty similar economy, same banking system, etc. But their government has seems to have just let the housing bubble, if you want to call it that, just deflate on its own.
Yeah. Well, it helps that all the banks over there are Aussie banks anyway. So
big fall.
He's sort of saying, well, if anything goes wrong, it's not like we need to worry about bailing out our banking sector because they've all got profits from Australia to keep them alive. So. Yes, excellent. Actually, go to one more message.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now, direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show.
Right. So I guess from an investment perspective, I guess summing up what I'm hearing is probably going to be good for housing market. If you own a house, probably going to be good for the house. The house is probably, if you're worried about Australia's productivity, it's probably a bad thing. With exactly that, that's the other side of that same coin. Doesn't seem a lot of difference between the two. Maybe there's an argument around health. You could sort of argue on those. I think around some of the gas suppliers, you can have a bit of an argument around whether that's positive or negative for it. But, X that, not a lot of that investors really need to think about. Leith, any last words or any last thoughts from you on that?
No, just that I'll be happy when the election's over. It's been pretty tedious watching this one, and I've almost become an advocate for 4-year terms because just so we have less election cycles, less election campaigns where we can get stupid policy.
Yeah, but much more exciting in the US, isn't it?
Much.
Which is where we want. Sometimes you don't want the excitement, though. Yes, that's we would just like some better policies. I think is probably the guts of it. Anyway, thanks everyone for listening in. Just a reminder, you can get us every Thursday, 12:30. Thanks everyone for asking. I think we seem to have a lot of comments in the chat as opposed to questions. So if I did miss any though, feel free to send them in. If there's anything you want us in particular to have a chat about, and I will actually highlight as well. I did mean to talk about at the start. That first home we spoke about the coalition policy that helps in terms of that it will help first home buyers in terms of rating your super. But regardless of which party's in, you still have this first home buyer super scheme. And so that's effectively using your tax rate from your super. So it's not using your super, it's using your advantage tax rate. And so, I'd encourage people, if you haven't looked at that, certainly drop us a line, book it for a meeting, and we can talk you through how we can, how you can use your super to get there, effectively save 20% faster through your super if you're not already. Thanks, everyone, and we'll see everyone next week. Thanks, Leith.
No worries, mate.